Hello and welcome back to the show. So I am super excited today for my guest, Jim Shields. Jim is a real estate entrepreneur specializing in the build to rent niche for real estate investing, and he has helped multiple other entrepreneurs build to rent businesses as well with his company, Southern Impression Homes. Jim is also the owner of 18 Summers, a company that specializes in helping entrepreneurs, especially in the real estate space, build businesses that are also able to allow them to have the time and the freedom to spend with their families and enjoy the lives that they've built as well. So we'll be digging all into that, the niche of build to rent, and also, how to have, how to build yourself a business that you can actually, have the free time to, enjoy the fruits of your labor. So without further ado, Jim, I want to welcome you to the show.
Hey, Kobe, thanks for having me.
Oh, absolutely. Thank you for being here. And so I'm super excited to kind of dig into your story and a little bit about, how you got started, because this is a niche that I don't think a lot of people have experience with or talk about a lot of in the real estate space. So would you mind kind of just sharing a little bit about your story and, how you got started and what was it that kind of led you to the build to rent niche in what you do?
Yeah, sure. Like most people, I read a stat, and I guess it's gone up since when I started 25 years ago, but I was trying to pick the entrepreneurial niche I wanted to go into, and real estate kept coming back to me. I liked the tangibility, it made sense, and I read a stat that 7 out of 10 millionaires in the US made their money in real estate. And not only did I enjoy it, but those were good odds, and I didn't come from money, and I wanted to accumulate it to live the life I wanted to live, buy back my time, enjoy my family life. My parents never were able to, always had to work and tough to make ends meet. And that's how I ended up into real estate. And when I first went into real estate, I had a lot of excitement, desire, passion, enthusiasm, drive, and it almost bankrupted me. And I had to learn from those mistakes of picking the right properties, what areas, how bad of a fixer-upper do you want to choose to work with, how do returns actually work, how do you make sure that you're not over leveraging yourself? It was a tough time, that first niche, but then course corrected and went into a niche of buying and fixing foreclosures overall, not only HUD foreclosures but bank foreclosures. And I did really well at that. That made money, but it was bankrupting my time. So I didn't like that. I wanted to, again, the goal was to be able to buy back my time and enjoy, the fruits of the labor. And then I finally really hit my stride about 10 years ago. And that's when I was able to not only create wealth for myself and for a lot of our clients, but also, be able to spend the time where I wanted to with the people I wanted to. And that's build to rent that came in. And build to rent was really just a changing necessity where my now partner, who we were doing some properties back and forth, just basically said, "Man, it's getting hard to find these fixer-uppers. What if we just built our own properties instead of trying to find old fixer-uppers?" And that's as small as it started. And you know, almost a decade ago, we put in some development fees and we built about $3 million worth of real estate for build to rent, and it went okay. We learned a lot, but we saw that there was really good signs and signals this could work. And fast forward to today, we did 185 million in sales last year. So the niche has grown. We went from one market in Florida to a dozen markets in Florida. For our clients, it's less involvement for them, less time, less headaches, better resaleability, better overall growth. And that's something that I've learned going from old fixer-uppers to new construction.
That's pretty cool that, I mean, it's again, like I said, it's not a niche that a lot of investors are talking about. I think more and more, maybe in the future as we, share a little bit about, what the benefits are. But I guess that is a question that I think a lot of people might have is, what are some of the benefits of, choosing this route of build to rent rather than going the fixer upper route? What makes it different and how would those two kind of compare?
Yeah, I think when you're starting out, there's a desire to have a large quantity of property. And I know for way back when I started, it was this 100 house club. If you had 100 houses, you were set. Well, I went for that, and I hit that, and then almost doubled that. But what they don't talk about, Kobe, is what is the quality of those houses? What is the area? How much deferred maintenance are these? Can you fully rehab them? Will they need extra maintenance repairs? Is the turnover more? And that's what I learned with these older houses. So the advice I always give to my family or close friends, hey, I'm going into real estate. What should I do? What would you do differently? I'd own less of better quality with less leverage. And that takes a lot of discipline, and I was risky in the beginning. I went into a lot of high leveraged situations and tougher properties. I didn't realize how tough they were, probably. And that is something that you have to watch for. So I think the advantage with build to rent, this what we do is not for everyone. Some people, they really like to get into the trenches. They want to find the deals on their own. They want to handle the contractors and be involved more in the property man. They enjoy that. But the majority of the people that what we do works for is they don't have a lot of time. They're wanting to own real estate, but they don't want a lot of the classic headaches that go along with it. And going to the new construction model, again, there was just a huge shift. One of the biggest shifts we found was tenants stayed longer, and in addition to that, the maintenance and repairs were a totally different situation. And this is something that is really tough to put on that initial pro forma or number sheet you're working for your first rentals. And we found that and I've owned hundreds of older properties. And that's great. It's a good niche. It can work. However, you always want to be aware of what we called, and my partner called, because he owned just as many, the 3-year curse. The 3-year curse means, house built in the 40s and 50s. I can do new kitchen, bath, electric, update plumbing, heating and cooling. It just seemed, by year 3, Kobe, I would just have to up my maintenance and repairs. Like there would just start to be issues. And now being almost a decade in on the new construction, we haven't seen the 3-year curse. So that's a really important component of what we do and why we do it.
Yeah, so it's important to, understand. So when you're building a new home, right, there's not a lot of maintenance that goes into it because it's brand new, right? So you don't have to go back and fix things that are broken or, you have to go back and redo, right? So I think that's a big part of, would you say, saving costs and saving also headaches as well when you're doing build to rent?
Huge. And what I see with a lot of people of what really destroys new investors in the beginning of real estate investing. I've worked with thousands of investors, taught at many different events, coached. And what usually happens to the ones that really have a horrible experience is they get into a few bad properties in bad condition, in bad areas with bad tenants, and they take a beating. And it's a very common recipe. Yeah, but I thought they were so cheap and I could figure it out and there wouldn't be all these so many repairs and so much turnover. And so it's a very important change in what we've done because we know that if you can get the wind at your back, if you get into a good property in a good area, and you're in a market poised for growth, and I can go over those factors we look for growth. I don't depend on appreciation, Kobe, but I do my best to get in its way. And there are some indicators you can follow that I was taught by mentors. And we want those less headaches. We want to take away all of those guessworks or as many as we can. You can't completely take away, but you can minimize. And the new construction model has done just that.
Yeah. So maybe talk about that a little bit as far as identifying markets, right? Because I think a lot of people, when they're thinking of, maybe build to rent, something that comes up is like, where would you, pick the place to build, or is there going to be like limited inventory as far as the available space that you're actually able to build on? So what does that process look like for you guys as far as identifying places and also, capitalizing on them?
Yeah, so we're in Florida in about 12 different markets. And there's 5 factors we always look for going into a market. Is there economic growth? Real important. There's got to be jobs going there, business stirring up there. Is there population growth? There's got to be a significant degree of population growth occurring. This is a key one. Number 3 is really important, affordability. The affordability index is what signals whether there'll be cash flow or not, really. If the average salary for an area, let's say here in Jacksonville, the average salary here is about 62,000, and the average price of a home about 299. So that's a good affordability index. You go to somewhere like San Francisco or New York, where we had a lot of buyers who come down from, not even close. So that affordability index, Kobe, is key. Next thing is desirability. Is there something drawing them to the area? People want to, we found to be in warm weather, not too far from bodies of water. And that's a desire for us. Is there some sort of leisure things there? What are the schools like? All these things are desirability. And then the fifth, which is important for us being builders, is supply and demand. There has to be a healthy ratio of supply and demand. I mean, you can look at different stats around the US. There's some Midwest towns that are shrinking. I don't want to go there and try to build houses. That would be a pretty scary situation. Florida, as you know, has been the fastest growing state through the pandemic. And so we're behind on housing in several of our markets. So we're a few years behind on needed inventory that will take a few years at least to build. So you always want to look for that. Is there a demand for housing and not enough of it?
Yeah, absolutely. I think that's very important, right? As far as even if you're buying, used homes or not doing built to rent, right? You want to make sure that there's actually demand for the housing, so that way you're able to, rent it out, but also, also let go of the homes whenever you wanted to cash out or maybe switch into a different investment property as well. How are you able to exit out of your investments as well? And that's probably
Mhm.
brings up a good point, which is, are is that something that you guys are thinking about doing as well for in your business, is the exit strategy
Well,
for new
exit,
construction?
exit strategy is huge, huge, because some people say, I'm going to be landlords forever. But what if you don't want to be? And sometimes if you buy a house in not great condition and not a great area, it could be harder to sell. And the only people you're going to be able to sell it to are another investor. And it's tough to find maybe an owner occupied person who wants to buy it, in certain rental areas. And so with the new construction where we've gone into better areas and better condition, we see that you have two options for resale. Yeah, one, another investor, because we build single family duplexes and quads. So, if you buy a quad, you're probably going to have an investor buying you out of it down the road. But with a single family or duplex, we have lots of people that built 7 years ago and they're selling now and making a nice profit, and they've had first time home buyers buy them out. And there's something really good to be said about if you're trying to sell it retail to a owner occupied person, a home that's only 7 to 10 years old and is only 7 to 10 years old, that's very attracted to them. It's very attracted to FHA guidelines and the loans that you get. Also for the investor side, if you own a quad and you sell it, hey, an investor stepping in, this quad's only 10 years old. I've bought quads and duplexes way older than that. And, there's the 3-year curse that I know I have to expect and budget for. So the exit strategy is key. We also don't have appraisal issues. In our areas, we like to build in areas where I think there's a misconception sometimes about Kobe is, build to rent is you build an entire neighborhood and rent the entire thing. And look, we do that. We work for some of the bigger family offices and hedge funds that'll build whole neighborhoods for themselves and manage the whole thing. And it's all rentals. That's one strategy, yes. But a lot of our duplexes and single homes, for example, we buy a lot of infill lots. So we go to markets that, have a lot of lots and, a couple square miles, and we'll buy up all the lots and then put our properties in there. Well, those have a great ratio of homeowners and renters. So that's a really positive thing for values and to have that double exit of whether it's an investor or an owner-occupied person that wants to cash you out.
Right. Yeah. So I think that's a good distinction, right, between what people think of build to rent is versus what it actually is, right? So you're saying that I think a lot of people think that you're buying up the entire neighborhood and just building like an entire neighborhood of new builds where people are coming in there and you're renting it out. But you guys are correct me if I'm wrong, but you guys are buying individual lots in existing neighborhoods
In
and building
existing
on them.
neighborhoods in bulk. Yeah, that way you already know there's an established neighborhood. There's a great ratio of homeowners and renters. People really like that. Now, with our quad communities, that's going to be all investor owned. But we always do an HOA for those because I'm not a big fan of HOA all the time, but an HOA really does give a level of protection. So we make sure it's handled well. But yeah, it's a lot of people like, oh, well, I don't want to buy a house in an all rental neighborhood. And I understand that. I was taught that those fundamentals by my earliest mentors 25 years ago. That's why we like to buy individual lots in established neighborhoods because there's already a track record there. There's high home ownership, and that's always good for values for rental and for overall growth.
Right, absolutely. You see you're basically able to pick out markets that are already there instead of trying to create something on your own,
Yeah.
which is a lot better to do. So another question that I think a lot of people might have is trying to figure out the difference between, you know, build to rent and buying an existing investment property, is the costs kind of involved in the two, right? So it's probably safe to assume that, buying a new construction is going to cost a little bit more for an investor upfront than it
Yeah.
is to buy a fixer upper. But, how would you kind of describe, I would say, the long term, what's the difference between the cost and the long term savings that somebody might have as far as their actual returns on their investments if they went with a new construction rather than an existing investment
Yeah.
property?
Normally, if you're buying a fixer upper, again, this is we just did a video, my partner and I, to our community, and we have about 1,000 active investors right now, and about 20,000, that are on our newsletter. And we did it. Is it better to own one property or three properties? And we go into this whole discussion about it just based on our own history. And look, smaller, cheaper fixer uppers can be a great way to get started. You just have to be ready to commit the time, more management intensity, more open to surprises. Could be more early setbacks until the cycle starts to move you forward. So as long as you're okay with that, that can be good. For a lot of our people, they're not looking for a second or third job. The investors that we work with, they want to understand the fundamentals. They want to be a part of it. They want the potential for the higher returns in growth areas. And new construction is really the difference in that. Again, going back to my family and friend rule, and people say, what would you do? I said, own less of better quality with less leverage. No one wants to say, oh, I got to put 20 or 25% down. Yeah. I mean, that really, again, our people they're earning money well in their career or their business. And I encourage them, yeah, you want to be able to put that up to have a stable foundation in your portfolio. Years ago, my portfolio would have been at like 80 something percent leveraged. Now I'm at about 22%. I'm very conservative in my growing up older years now. And I encourage people, it's not the number of properties, it's the performance of the properties. And so for my own thing, I own from my peak probably 80% less properties, but I have more equity and more cash flow than I ever have. So what does that tell you? It's not the number, it's the performance of those. And what I found is when people plant in better properties, better areas, better conditioned properties, longer warranties, better chance of getting a better tenant, there's better resaleability and growth. And so I always encourage people, don't get wrapped up over the numbers, of properties, get wrapped up over the numbers that the house actually performs. Because I can see where one of my properties now would outperform 10 plus of my properties before. So that should tell you something. So is it worth the higher amount? I believe so, but also you want to make sure there's cash flow. We always want to make sure there's cash flow, which our properties do, and I can talk about. But for me, Kobe, I'll sacrifice some cash flow up front for a better conditioned property in a better area.
Okay, yeah. So that's pretty important to know for people to know as well because it is like you're saying it is absolutely dependent on the performance, right? You can have a million properties and none of them cash
Very
flow.
stressed. You'd be very unhappy at the end of every month because you're feeding them, which I got to a point of, which goes, gosh, what happened? And simple fundamental numbers made a big shift for me, and I don't miss those days. I got to tell you.
Yeah, yeah, absolutely. And so maybe talk a little bit about what can investors expect on the cash flow for a build to rent, and maybe the difference between what you're seeing in the marketplace for people who are doing like maybe the BRRRR strategy or even buying
Yeah,
like turnkey rentals.
yeah, and the burr is again something that I did for years. The turnkey rentals of fixing up older ones and buying them. They can be a great way to get started. I still own some old properties, but again, you want to look at the longevity. Everyone looks at the first 12 to 24 months. I like to look long term since it's a buy and hold, and I've had properties 20 years now. How will it buy and hold for the long term? That's really important. So you want to look at that. For the new construction, I can tell you the difference in maintenance and repairs ongoing for that first cycle of owning a property is night and day. Also, our occupancy time more than doubled from compared to doing old. And I did many, many, many hundreds of the old turnkeys doing foreclosures, and those increased in value and rent. But there was definitely a lot more involvement for myself, for my investors, and a lot more money paid in than we've seen with the new construction.
Yeah. So it's also like you mentioned less vacancies, right? You have people who are in these properties for a longer period of time, so you don't have such a high turnover rate, which can cause a lot of stress for the investors as well.
Exactly. And again, we don't do just single family homes, we do duplexes and quads. And now this was really important because quads are kind of unicorns. It's hard to find them. And so now that we've developed a niche where we know how to get them approved in better areas, that provides a great investment for ourselves and our investors because they're harder to find. Duplexes are harder to find, especially new construction, because the larger builders out there, they have no desire to build duplexes and quads. So that really helps set us apart as well. And we listen to our investors. They say, hey, we want to be in better areas, but we want a bigger cash flow than a single family can do. What can you do? And the instant thing was, well, residential real estate goes up to 4 units. We can provide duplexes and quads as well, which I've owned a lot of.
Yep. And I think that's a big key difference there as well, is that you guys are able to do that, right? You guys are able to provide investors with more options to, essentially cash flow more than just a single family home. Because now when you kind of spread it out, I think investors, especially those who invest in duplexes and quads, and maybe even multifamily, understand that they're getting more cash flow even from one property that might be worth the same if they're able to spread it out. And that's why people, rent, a single family home even. They will rent out different rooms to people to really maximize their cash flow on their investments.
Yeah, and that's doable, getting extra units. Another thing that's really important now, Kobe, that we've focused on and gotten into, especially over the last year and a half, is financing. Financing, we're all talking about interest rates. June of 2022, we just all were like, holy cow, and up, 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 up. I remember joking and saying, well, we might get concerned if like rates hit 8%. Well, there you go. Rates hit 8%, right? So we've actually developed our own in-house financing program. That's the good thing about being a builder with a strong balance sheet. You can actually pre-buy money. So we're in the money buying business where we will buy large chunks of money up front. And by doing this with banks, we can actually set a better interest rate than available out there. So right now, a lot of our investors, if they go into a normal mortgage company for one of our duplexes and quads, they're going to get charged a rate of 7.5, 7.75. Right now, we're locking our investors in at 4.75. So that is something that really helps set us apart. And from your experience, a big difference in that and a fixed interest rate compared to, those 2 or 3 points higher makes all the difference between a deal making sense or not, between it being cash flow positive or cash flow negative. So that's one of the most important things I think we've developed. And for anyone listening, if you're doing your own deals or you're looking to buy, see if you can get some sort of, it's called a builder forward commitment. Are they offering in-house financing that can get you off on the right foot? Because a lot of people are saying right now, oh, the numbers don't make sense. I said, well, what are you doing? And I'd say, why? And they said, well, because interest rates. I said, well, what's the interest rate you're getting? Well, 7.75. Well, if you got it at 4.75, would that make sense? Oh, yeah, that would make sense. So they're out there. Again, there's not many people doing what we do, but they are out there.
Yeah, and that's super cool that you guys do that because, it's almost like a full concierge service for an investor that wants to really get into these properties. So that's super cool that, that's actually available because especially with interest rates the way that they have been, right? A lot of investors are there's less options out there for them if there isn't an option to essentially finance through you guys. So
Yeah, yeah, they're tough. So yeah, we try to build, we try to finance, we try to manage. That's what we provide, and all of that's done in those 5 factors. If we can get those 5 factors, we're going to build in that market, and I'd say 95% of people use our financing and management that work with us.
oh wow, it's a pretty good number. So it's really like a turnkey solution, right, for those that are looking for
It
it.
is. One of my last interviews was they said this is kind of turnkey 2.0. Because there was, and again, I did old turnkeys and I've bought old turnkeys, and that can be a great way to get going, but they didn't usually include new construction. They didn't include financing like we're offering. Management was there, but again, tying all those three together can be a really important combination to get things off the right foot.
Right. Yeah. So switching topics a little bit here, and I want to touch a little bit on the kind of the other aspect of the business that you're working on, which is helping entrepreneurs, helping investors develop a better family life, right? So you have, your company 18 Summers. Would you mind kind of sharing a little bit about that and how you got started in doing that and kind of what you guys are doing with investors in that realm?
Yeah, it was a company my wife and I started about a decade ago because we wanted to see entrepreneurs be successful in business and at home. And getting started early in this business, I saw a lot of big balance sheets, Kobe, and a lot of failed family lives. And it scared me because I thought I'm very ambitious. I'm the last person to hold back on going for your goals, but I didn't want that to be my life, where you're at home and you're basically a stranger or just an ATM machine, and there's not a depth in relationship and not enjoyment. That sounded torturous to me. So, with my life starting ten years ago on this journey, it was actually 12 years ago now because it was 2011. I was going through some big things in my life, and I was uh, bringing back my businesses from near extinction. I survived the '08 meltdown, protected all our investors, but it was tough. So we were still wearing the stitches, going into 10 and 11, doing well, but still recovering from an unbelievable jolt of '08. And some people out there probably remember this. And along with running the businesses, my wife was having miscarriages. We had adopted our two oldest. We now have a combination of biological and adopted, 5 children. But we were going through miscarriages, going through adoption, and then I had just been approved to donate a kidney to my father at this time. So all these things were at a point of major. And I got sent this article about Steve Jobs. He had just passed away. And the article was about his biographer. And his biographer was saying how Steve Jobs spent his final days surrounded by close family and did interviews with his biographer to try to explain why he wasn't there for his family. And that was really powerful for me. I was going, okay, I can cross up my arms and say, oh, Steve Jobs had a reputation for being a jerk. That's not me. But I also know they say a man gets extreme clarity at the end of his life, right? And maybe you just put me some important clues. And I had to be honest, like at that time, if the rug of health was ripped out from underneath me, I probably would have been in the same situation 6 months from there, trying to explain to my family why I wasn't there. My wife, my two oldest boys. It would have been very uncomfortable. So I started to look at family life quite differently, to prioritize it quite differently, to try to say, okay, business doesn't have to suffer, but neither does my family life. So how do I integrate the two of these? And we ended up writing a Wall Street Journal best-selling book called The Family Board Meeting. That my wife and I did out of labor of love. We didn't want to be authors. We didn't want to talk about our story even. It was a little uncomfortable and vulnerable. And it just resonated with people. So what we try to do with 18 summers is make the most of that time. 85% of the quality time you'll ever have with your children for the average person is done by the end of the 18th summer. So this is a positive motivation. How do we make the most of that time? How do we do those first 18 years right so that our kids want to come back for more? And we're not stuck down to just 15% less time, more time with them in our life. But I think if you're intentional, you can raise that to 20, 30, 35% more time with the kids, even after they've left the nest. And that's what 18 Summers is about, just giving a very easy playbook on what we've done with our family and learned from other family mentors of how to make sure we're successful in business while being successful at home.
Yeah, and I think that is probably more important for people to spend a little bit more time on, especially those who are ambitious and even very successful in their business, right? It doesn't matter what they're doing, but to really take a moment and start thinking about why they started the business in the first place and realize that if they continue down the path they are and it keeps getting worse, then they would have essentially defeated their entire purpose starting the business in the first place. So, we hear all the time of, what some things to do, right? Like, you got to block out time, right? You have to actually dedicate time in your schedule to for your hobbies and for your family and for your friends, right? So is that something that, you guys teach? What are some, I guess, like some applicable things for especially those who are very busy and ambitious and they keep saying they don't have time, they can't do this, they can't do that. What are some things as far as like the actual applicable strategies that you guys have been implementing and also teaching?
Yeah, and I think you're right. It's a really important subject, especially for us entrepreneurs and real estate investors, because we're not family therapists, we're not psychologists, nor do we really want to be. And sometimes the information I found out there of how to have a better family life, stronger family life, it was very textbook, very heady, very hard to follow without clear action steps. And that was hard for me to follow. And so we tried to simplify the sciences and really only share principles and practices we were really using or we had worked with on, again, several other families who had taught us or our own our own concepts put to work and tested and proven. And so a lot of those, what I found though, can overlap into different practices, habits, rituals, rhythms, whatever you want to call them. But there's principles that help tie them together and can be used in all those. And let me give you one of them. One of the most important principles that my wife and I have learned, and it's so funny, it's rarely talked about, is the one-to-one principle. This is something that it still baffles me that it's not discussed more because it really is a healthy hack. It is the meat and potatoes, not the garnish of a successful family life. And the fact of the matter is, if you want to have a deeper, more meaningful family life with the people closest to us, you got to separate the parts to strengthen the whole. You got to have one-on-one time. One-on-one time puts the magnifying glass on that one relationship in its own way, takes away distractions, takes away sibling rivalry. If your children lean on your spouse more because they're home more, takes that option away, so it's just you two. And that is so important to have scheduled one-on-one time with your spouse, with each of your children. That's what really my book's about. And we're not talking, if you're busy saying, oh, how am I going to do that? Ours is spending a day a quarter, a half a day a quarter with each of our children every night. Tonight is date night for me, Kobe. I'll be unavailable from 5:30 to 8:30, a weekly date with my wife. But some people go, oh, I'm too busy with kids. I can't do this. You are cheating yourself. And we've worked with thousands of families now over the last decade. If you do not embrace the one-to-one principle, you are cheating yourself out of the depth of the relationships you could have because it doesn't take away camaraderie. It actually builds it.
Right. And I think, for a lot of people, so you mentioned you had, you have 5 kids, right? A lot of people think, one-on-one time, how is that ever going to happen? So it comes down to intention, right? So you mentioned you've blocked out, your tonight is date night for you. So you've blocked out that time. You're not going to allow business into that time. Right? And that's your choice that you have to make beforehand.
Yeah, and that which we schedule gets done. So people, oh, that's so impersonal to schedule time with your wife or your children. That which we schedule gets done. I'm an entrepreneur. I'm going to go with it. They are some of my most important clients or investors in my life, whatever you want to call it, through my entrepreneurial brain. So I schedule that time. My assistant puts it on the calendar. They know I'm not available. It will take a lot to move that scheduled time. Of course, it's happened before, but rarely. And when it's on the calendar, it doesn't get trampled over. So one-to-one time is so key, and you got to schedule it. And it is I've watched it save marriages. I've watched it bring quiet teens out of, complete silence to discuss things their parents say they never would have. And again, like you said and joked about, Kobe, you're absolutely right. I have 5 kids. They range from 2 to 20. We'd be in trouble if the 20-year-old is having the same conversation as the 2-year-old or acting the same way. This is why it's like we love big family gatherings and adventures, but there has to be time with just that one person because they're in different stages. Who the hell wants to talk about puberty in front of their little sister or brother? Are you kidding me? Like torture me? So that's what one-to-one sets up. So that is absolute key. The other one that I'll tell you about to go with, and again, these are pretty straightforward, but they're so overlooked, is something we coined in our company years ago called intermittent tech fasting. So, you look like a fit guy. You've probably heard of intermittent fasting. The studies are out there from what I've read. It's good for organ revitalization, weight maintenance, muscle tone. You're not giving up eating, Kobe, but you're saying, I'm only going to eat between this time and this time, right? For these benefits. Same thing with technology. It's great. You and I can have this long distance conversation from Florida to Texas right now, but sometimes you have to be completely unavailable for the most important people in your life. And although these devices have been great, they've also trampled over deeper connection. And so there are times where I'm completely unavailable. When I'm on that date night with my wife, you can't reach me. My phone is off. She keeps hers on just for the nanny babysitter, but my phone is off. When I'm on these half days or day adventures with each of my children, you can't reach me. Because as soon as I take that one text, that one phone call, look at that one email, respond to that one useless Facebook thread that doesn't even need my attention anyway, then I've just really said that is more important than the person sitting in front of me. That also gives them a scare of like, well, I don't have his full attention. Can I really open up about something? And we claim we're these excellent multitaskers. We're really not. We stink. I mean, every time I speak to a crowd, I say, how many of you have been on a text or a phone call and try to give your child an answer or your spouse an answer, and you think you actually did, but when you look back, you're like, that made no sense, and I just made an ass of myself. And every hand in the room goes up because we all do that. We're not good multitaskers, so you got to disconnect to reconnect. Put intermittent tech fasting into parts of your schedule, and the time that you have together with your loved ones together or one-on-one is going to be so much better.
I think that's very powerful what you just said because I do know a lot of people, and I think there's plenty of people who do this who, maybe they're on their family time or they're on their one-on-one time and they don't turn their phones off, right? Maybe they get a text message and then they look at it and they're thinking to themselves, "Oh, I can respond to this quickly. It's not going to take much time. Let me respond to this, right? Maybe this is an opportunity that I don't want to miss, right?"
Yep.
And they don't think it's that important. And sometimes it actually leads them down like a 15-30 minute rabbit hole.
Oh yeah, at least. Let me tell you a good story. Get home from work one day. I usually leave my phone in the car, in my computer bag, don't want to be bothered. And my daughter, who's 9 at the time, she was 5. And she said, Daddy, let's do trampoline. Because I'm like, great. When I get home from work, again, my phone's off for at least an hour or two, where I'm just not in communication. But I broke my own rule, Kobe, which we all do. I had my phone in my pocket. So I'm getting on the trampoline and I hear that dreaded zzz, zzz, zzz in my pocket. Now, before I even look at it, it's 5:30. I haven't even looked at it, but my mind's going into 7 different trails, right? What could that be? I'm going, blah, 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 blah. I pull it out, and everyone listening to this who's in real estate understands someone screwed up a closing. I mean, there was a simple thing that had to be in, and the closing that was supposed to happen didn't happen. And I'm like, dang. And going through these scenarios in my head, I'm swearing under my breath. It's 5:30. Title company's closed. There's nothing I can do, but I'm just, I'm furious. And all of a sudden I come to of where I am, and my daughter's standing in front of me on the trampoline. She's got the little quiver lip, looking really sad. And I'm like, oh, sweetie, what's wrong? What's wrong? And she just said, Daddy, why are you so mad at me? And it was like, oh, like shot to the heart of like, here I am pissed off about a real estate deal that didn't close, swearing under my breath, trying to figure it out. There's nothing I could have done, whether I got that text right then or an hour and a half later. It was going to have to wait till the next day. And here I was thinking, like, oh, yeah, I can check this real quick, just like you were saying. And I put that poor little sweetheart of my daughter into the situation where she thinks I'm furious at her. And I think this happens more time than we know when we're trying to do exactly what you said, that quick thing, because you don't know what you're going to get. Yeah, if you get a celebration thing, hey, 2 extra closings happen. Woohoo! But a lot of the time, in our game, that doesn't happen. There's surprises, there's setbacks. And if you don't have that time of separation, all of a sudden you could be doing what I did to my poor little daughter and projecting that onto your family wrong with a wrong impression that you don't even want them to get.
Yep. I love that you share that story. So thanks for sharing that. I mean, I think there's so many people with similar, maybe they're experiencing this on like a daily basis, but they just don't know and they're not aware of it. But I think, for people to hear that and understand the effects that doing something like this can have on yourself and also your relationships and the people that you really care about and why you're doing, like we were saying, why you're doing the business in the first place, it really changes your perspective. And I think I have really one last question about this, and that is a lot of people, they're able to turn their phones off. They're able to kind of disconnect themselves from their business, but it's hard for them to kind of turn their minds off, right? So it's
Mhm.
jumping from their business, maybe closing down their computer, getting back from a closing or a property, and they're still thinking about the problems that they just encountered, and they're not able to be fully present. Do you guys have something or something that you do personally that maybe like a little reset between your family time and your work time where you're able to, maybe turn your mind off, right? Or at least block out the distraction so you can be fully present for the people that you actually care about.
There's a couple things that can help. First off, so my office that I'm in right now, it is 5 seconds from the beach and 5 seconds from my house. I built a little office in the corner of my yard near my house. I will get off a call or the end of the day and try to just sit for a few minutes. Just sit for a few minutes. So I'm not like, okay, Colby, great interview, bye. And then, run into the house because then you're still working it. Sit for a few minutes. maybe write down a few things that you have to do for the next day that you're concerned about. Again, one of the biggest things I'm concerned about this, just write it down. Like I'm a writing this crystallization guy, so I still write it down because then it helps get out of your head. And from there, you know, one of the biggest things I got out of mentoring was accountability, being mentored and mentoring others. Hold yourself accountable. You know, take inventory. Be like, damn, I'm not here. I need to be here. I wrote it down. There's like my example, there's nothing I can do about this right now. I'm going to be here right now. And I've figured that I don't want to be a fake attendee, meaning I don't want to go into my family life and be working on a real estate deal and my kids, I can't hear anything they're saying. So call yourself out, not meanly, not like you son of a, you keep doing this. That's not going to do any good. I mean, don't beat yourself up. You're working hard, but say, hey, we made a promise. There's nothing I can do for the next hour or two. You know, and promise yourself, look, if I'm going to plan the day or write down some things, I'll do it in 2 hours after kids go to bed or something like that. That's what I still do. And so that's helpful. And another thing that's key on that, where I've gotten really good at, too good at, where I remember I got a backhanded compliment from my son, like, yeah, dad's always messing up, but he always apologizes. And that's the art of apology. You know, if I'm not paying attention or I miss something, I say to my daughter or son or my wife, I'm sorry, I was in my head. What did you say? I'm sorry, I didn't hear that. And I apologize. And apologies go a long way. And I got to tell you, what I've learned overall about real estate entrepreneurs and entrepreneurs in general, since we're very go, 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 we work so hard, we're so committed, you know, sometimes we give ourselves immunity to apologies, and that's a very bad thing. You know, entrepreneurial immunity is such a double-edged sword that really comes out ugly years down the road with older kids and your spouse. You know, have the humility to apologize when you mess up. Yeah, you're working hard to provide. It doesn't mean that you're above the rules of respect and attention, and that's really important. So that's what I do. When I mess up, I apologize. I try to take a few minutes before I go back in, and I write a few concerns down. So it's like, okay, I got this here. I'll work on it later, and I give myself permission to say, I'm playing on the trampoline for the next hour. I'm going in the pool for the next. We're walking up on the beach and playing for the next 2 hours. I can get back to it and just make a promise to yourself.
I love that. I love what you said there. You give yourself permission. And I think a lot of times busy entrepreneurs, they don't give themselves that permission, right? Especially with all of the, and it's good, right? The motivation and the
Yeah.
coaching out there, right? We don't give ourselves permission to, really get away from work, right? Because we think we should be doing more.
Well, and get away. There is a very dangerous uh, badge of honor out there that kills effectiveness or efficiency, and that's I put in 115 hours last week. That means absolute shit to me. I don't know what that means. Were you half on your phone and kind of scrolling and doing any like and waiting out the clock, or are you doing things in such a way that they're completely inefficient? You haven't hired the right people, you're not working with the right people, you're not focusing on the right priorities. That's all that can mean to me. Not that there couldn't be real effectiveness and you just went way all in. But a lot of the times I find people who brag about their hours, they're being very ineffective. They're being very unfocused. And then they're missing their time and they're trying to brag on it and they're not even getting the best results. So that's something you want to be very careful of. And also those old mentors, and I remember some of them, lucky I didn't listen to say, you're going to be an entrepreneur. You got to put your head down and just go full out for the next 5 to 10 years. You can get back to your family life. They'll understand. They'll appreciate all you've done. That's terrible advice, awful advice. The years are not all created equal. You got to be there all along the way. You can still be ambitious, still put in the extra work, but you also want to be efficient, effective, and be there along the way.
That's really good advice. That's really good. I'm really glad you said that because there's so many people out there who listen to that, right? And they live by that, but they don't realize that in those
Mhm.
5 to 10 years, life still happens, right? And you want to spend some time to enjoy it, to appreciate it, to really be present for that, right? And
Yeah.
not just turn a blind eye to that altogether. So
And I think you hinted that before. You said, well, we forget why we first got into this in the first place. It wasn't to overwork and be stressed all the time. So, we're going to be an entrepreneur to live life on our terms, to be able to do the things we couldn't do as kids, to provide the things, to have the adventures, to give to the causes we care about. dad, be the only dad at the school play in the middle of the day, whatever it was for you. And we sometimes forget that. And it's okay to take inventory and not listen to some of the advice out there.
Yep, absolutely. Well, Jim, I want to thank you so much here for being here today and sharing your knowledge and your advice and a lot of your stories as well. I think it was really helpful for people who are either looking to expand on their rental portfolios through a different niche, or also if they're an entrepreneur looking to really take in their life and to spend more time with their families and the things that really matter most. So for people that are listening to this, watching this, that want to follow you or want to know more about what you do with your different companies, what are some of the best ways that they can follow you or reach you?
Yeah, if you're interested in our build to rent program, my wife and I designed something called the jjplaybook.com. You can go there. That's free. It's the principles of how we built our real estate business over the last 25 years and also created the family life to be able to enjoy around it. That's a great starting point. You'll see our next book is coming out too. We're expecting it to be a Wall Street Journal bestseller from our publisher who got us there on the last time. So that's a great starting point. You can look at our other book, The Family Board Meeting, that's for sale in Barnes and Nobles or any Amazon or anything like that bookstore. But those are two great starting places for our build to rent and kind of our family programs to look at.
Awesome. We'll make sure to leave the links to that in the description. Anything else?
Yeah, just if they're interested in more family life, we blend in some real estate, but our 18 Summers Family podcast is popular with a lot of entrepreneurs and real estate investors because it kind of fills in that gap along with a little real estate of how do we be successful at home while we're playing this crazy game.
Yep, absolutely. We'll make sure to leave the links to that in the description, the show notes, so that it's easy to find. But make sure to give that podcast a listen as well. So, other than that, Jim, thank you so much for being on the show again. But before I let you leave here, is there any last pieces of advice, any last tips you want to leave with us here?
No, not really. Just remember one mistake in real estate is usually not going to kill you. You can work through it and don't beat yourself up. There is no perfect family out there. Just start to put a few principles into place. You're going to see big results.
Awesome. Appreciate you, Jim, and appreciate you for tuning in. And we will see you on the next show.